Welcome to the Business Standard Banking Show. Fino Payment Bank is one of the 6 payments banks in the country and the only listed payments bank. Fino is completing 5 years of journey this month and has chalked out a plan to embark the second phase of its journey. To talk more about that, we have Rishi Gupta, MD and CEO, Fino Payments Bank. Mr. Gupta, welcome to the show.
Thank you, Manojit, and thank you, Business Standard, for this opportunity. Thank you very much.
Sir, Fino is embarking on its 2.0 version from this financial year. So, what is the plan and what do you aim to achieve there, sir?
So, in our first 5 years of journey, our focus has been to establish ourselves on the ground physically. And the customer segment which we are focusing on are people who are in the middle to lower middle pyramid of the country. So they need physical access and physical reach through which they can do transactions and do banking, basic banking services. So in the first phase, we have covered more than 90% of the districts. We have nearly 1 million merchants on which the transactions can be done. So after completing the first phase, and that phase will continue as such, as you would recall, Fino is always talking about the phygital model, where physical and digital can seamlessly meet. We believe our customer segments require assisted digital before they move to a completely digital model. That is why for us to set up the physical infrastructure was very, very important. And we have done quite well in that, and we'll talk about it as we progress in the interview. But the digital journey is something where our merchants are actually assisting the customers to download the Fino app, and then through that, the customers are now experiencing a digital experience or digital footprint of Fino, which the customers are experiencing. So just to give you some data, our UPI transactions are now nearly 10% of the overall value of transactions for us, which was a few percentage of maybe about a year or so back. So from a physical to assisted digital to digital, that is the phase for Fino. And Fino 2.0 talks about how we can convert our customers or help them become digitally more savvy, and so give them an option from being a physical as well as being on digital. So that is the Fino 2.0 journey.
Sir, coming to the Q4 numbers of the bank, Q4 of the last financial year was characterized by strong revenue growth. Yeah. What was the key drivers?
So the revenue growth was coming from largely from three parameters. First is that Fino has been focusing on how we can build up our own customer base. So our CASA and CMS has been something which has been a flagship products. So our CASA growth was quite substantial in Q4. We opened nearly 6.7 lakh customers accounts compared to 5.1 lakh in Q3. So you can see there was a 30% plus growth in our CASA. Secondly, we had a substantial growth also in our CMS business, which is the cash management services business, which we do. There also we saw a growth of more than 30% in the Q4 numbers over Q3 numbers. So those were the two substantial growth trajectories which we saw. Over and above that, we saw that remittance business, which got affected due to COVID, has started to come back, and we could reach higher numbers on the remittance side also compared to the pre-COVID numbers or during the COVID period. So 2-3 factors which resulted in a growth in Q4 substantially. If I give you some perspective, our CASA actually grew by more than 80% in FY22 over FY21. In FY22, we opened nearly 20 lakh accounts compared to 11 lakhs in FY21. Our CMS business, which I just spoke about, have now 131 partners, and it grew by 102% in FY22 from 11,800 crores to 24,000 crores.
So last year, the revenue was about 1,000 crore. What is the revenue projection for this year, this financial year?
So our guidance on this is that we will look at a growth of 25% plus on a year-on-year basis. So in FY22, we grew at about 28% on our revenue side, and we crossed 1,000 crores number. We were at 1,009 crores.
So revenue was one of the key source of your remittances. Sorry, were one of the key sources of your revenue. But the remittances contribution to total revenue has fallen from 51% in FY20 to 35% now. What is the reason, and do you see further decline in the share of remittances of your total revenue?
So let me put it in terms of that our overall business is growing. In that business, the growth of remittance is relatively lower compared to the growth in some of the other businesses, which you can say is CASA and CMS. CASA and CMS in FY20 was only 7%. Now it is 18%. Remittances, which was 51%, has become 35%. But on the overall level, if you still see, remittance in absolute numbers would be higher than FY22. The kitty itself has grown, and within that kitty, we have seen ownership products and CMS products growing at a faster pace compared to remittance or even for cash withdrawal businesses.
Sir, do you think increasing competition would result in higher merchant payouts, which could dent your margins?
See, there is definitely more competition which is going to come in this ecosystem. We are seeing local players also getting into some of these businesses. So merchant payout is one of the factors which can get affected, but because of our relationships which we have with the merchant for so many years, the kind of products which we are able to offer, the stickiness which is there, and we know while the bank is for 5 years, the Fino group has been there for 16 years. So people understand that it is better to work with a stable, growing organization. Especially with the IPO listing which happened last year, the brand of Fino has become more visible, and people, more merchants want to be associated with us because of the brand which Fino now carries.
Payments banks are not allowed to lend. Do you think it's time RBI should relook the issue and allow at least to extend small loans?
I agree with you completely, Manojit. In fact, there's been multiple representations which have been made to RBI by us, by industry forums, by other payments bank, because we are only looking at one side of the bank. So let me just put this in a little broader perspective. When I look at the payments bank, we are allowed to do all kinds of payment transactions. We are also allowed to keep customer deposit up to 2 lakh of rupees in our bank, and a partner bank we can keep more than 2 lakh of rupees. So we have payments infrastructure, and then we have some part of the liabilities infrastructure which is allowed by the regulator. So whether it's a small finance bank or within payments bank also, multiple representations has been done that while all our 100% money goes into government securities and FDs, the 2 lakh limit itself should go up. So it should actually, to my mind, should not. Why should there be a limit at all? Because it's a completely secured business. There is no credit risk, or there is no other risk as such on the deposit. And secondly, the DICGC fees also is up to 5 lakh of rupees, which is the premium calculation which we have to pay. And secondly, on the lending side also, because our customers are there in the rural geographies, they come to us and open an account and expect that at some point we will be able to lend to them. So from a complete customer offering, if the regulator can relook, it's more than 7 years of the regulation. If the regulator can review the regulation and open up liabilities as well as micro credit for payments bank, I think the regulation or the guidelines for the banks will become far better.
That, what will be your roadmap for the next 5 years? Do you see yourself as a payment bank at the end of the 5 years? Because you have completed 5 years and you are now eligible to apply for a small finance bank. Is that something you are actively looking, your board is looking?
So on our first 5-year journey, it has been quite rewarding, let me put it that way, because if you, Manojit, you remember, you must have also asked me the same question. What is the payments bank model and how will it really work as such? But in the last 5 years, actually proven that in spite of the headwinds and the payment ecosystem, which started to open up so dramatically in the last 4-5 years, Fino has crossed more than 1,000 crores of revenue, was probably one of the first banks to become profitable in the payment space, was one of the first scheduled private sector bank, and also the first listed bank as such. So in FY22, our PAT grew to 42.7 crores, which is 109% growth over FY21. So the first 5 years of journey has been quite rewarding, better than, to some extent, I would say even better than what we had envisaged. We expect that FY23 onwards will continue to maintain our revenue growth of 25% plus. There is a lot of headroom which is available in the payments bank space, in the payment space itself. We are just touching only the payments as well as the liability portion of the bank. There is still credit and investments which we can offer through partnerships to our ecosystem. So there is a lot of growth which is available in the ecosystem as we look at. Our offers to honest journey of converting customers who come for cash withdrawals as well as remittance and convert them into CASA has been quite well and well accepted, with more than 2 lakh plus accounts being opened on a monthly basis. So looking at the fact that there is still a lot of headroom which is available, we are only while we are covering a lot of geographies, but from a customer point of view, we are only covering maybe 5% to maybe 10% of the customer ecosystem. So there is no real hurry for us to look at lending or getting into SFB from the point of view of from a business model point of view. What is interesting is the fact that we get payments bank plus benefit. One plus is for the liability side, which I just explained to you, that there are a lot of restrictions on the balance, which can be more than 2 lakh of rupees. And for us to become a complete bank, we would look at an unrestricted kind of a liability amount as such. So SFB offers us that unrestricted liability benefit, as well as it offers us a lending platform. Having said that, we see a lot of play in the current model itself. So right now there is no discussion at the board level on conversion or applying for a small finance bank. But this is a piece which we'll keep on evaluating on a regular basis, and then whenever we feel there is an opportune time, at that point of time, probably we will relook at it more seriously. As you are right, the guidelines currently allows us to convert into an SFB post 5 years of completion of the payments bank, which we'll be completing by end of this month.
Mr. Gupta, thank you so much for speaking to Business Standard.
Thank you, Manojit, and have a nice day, and all the best to you and to your readers. Thank you.
Thank you, sir.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.